Welcome to Baldacci on Business. This is our second show, and again, I want to thank the producers and people involved at the Community Television Network, Channel 5, for their help and support throughout the last couple of months now that we've had this program. This is our second show, and tonight we're going to focus on forming your company. The first show, as you may recall, for those of you who watched it, and again, it's online on our Facebook page, Baldacci on Business, as well as the archives at Community Television Network, channel5.com. Our first show dealt with, basically geared to people who are interested in starting their own business and those who are in business that want to go to the next level. Just some concepts in terms of lessons learned from a consultant that we brought to the table, as well as a real live business person. And I thought it was a terrific show, and I learned a lot as well, and I hope you did as well, for those of you who watched. And it really provided the rudiments of what's involved in putting together a business plan, which is really the first step in assessing whether or not you should even think about getting into business. And tonight, we're taking the next step. And the next step is, yes, I want to buy that franchise, I want to buy that business, but how do I form it from a legal perspective? What's the best approach from a legal perspective as well as a tax perspective? And I'm very, very pleased to have with me tonight two experts in the field, an attorney and an accountant. The attorney is Peter Cary, who is on my right, and Peter is a partner with Middle Asen, a law firm here in Portland, and he's a business attorney and has a great track record and actually has worked with us on a couple of projects as well. Peter, welcome to the show.
Thanks very much for having me.
And we have Marc Powers, and Marc is a partner at Purdy & Powers, and as you well know from Marc has been a long-time business person here in Portland, has worked with businesses throughout the state and the region. And I'd like to also point out that Marc, as a University of Maine alumnus, Marc was on the University of Maine baseball team and pitched in 2 College World Series. Is that correct?
Yes.
Now, don't be bashful. I'm proud of that, and it's great to have you here, Marc. But Peter, tell us a little bit about you and your background and what got you into the practice of business law.
Sure, yeah. I couldn't make it in baseball, and
No?
so I ended up turning to law and ended up in a firm here in Portland, in 1988, Middle Asen, and been there ever since, and practiced sort of a wide variety of business law and business law related issues, including formation, structure, and the analysis of why would you want to be an LLC, for instance, versus a corporate structure, versus just a partnership, or versus a DBA. Yep. And it's a practice that's varied, and while maybe not as exciting as that excitement of starting up your business and developing the product, it's something that's fun to do, and I like it, and I think it's pretty important.
Well, we really appreciate you being here tonight to offer some of your insight and advice and suggestions to our viewers. And Marc, tell us a little bit about you and what got you into accounting and financial consulting, and a little bit about your firm as well.
Okay. Well, the firm is Purdy Powers & Company.
Yep.
I have 4 other partners as well, and over the years we've represented over 1,000 businesses. And the businesses range from anything from a small sole proprietor to $100,000 in sales up to $50 million in sales. So really vast experience there. Most of the stuff that we work on is the small, closely held business and their needs that they're going to have. We try to stay away from the regulated businesses here in Maine, and but we try to, all our education that we try to gear for is helping the small business prosper.
And I can speak from a little bit of experience working with Marc. Marc's been involved in a couple of different businesses that I have an interest in, and he's been terrific. And again, we appreciate you being here as well, Marc.
Thanks.
Maine has over 140,000 small businesses. 100,000 of those are really self-employed individuals who are in business. So we have about 40,000 incorporated small businesses, and not that you guys have dealt with a large majority of those, but you have dealt with many small businesses, and people who are thinking about starting a business, as well as those who are in business that may want to buy another business or expand or bring in partners. So tonight we want to focus on the various corporate structures that are available to people who are thinking about getting into business. And from your perspectives, what do you think is the most popular for somebody that is thinking about starting a business? And again, feel free to open it up.
I would say the most popular choice now is for people starting a business is an LLC, limited liability company, and primarily because of its flexibility.
Mm-hmm.
What I like about an LLC is everybody makes mistakes, and one of the things that you got to look at from an LLC perspective is the taxability issues that you have. And what I found is that over the years, one of the things that I like to look at is the ladder approach. And if you're an LLC, basically there's a sole proprietor at the bottom, an LLC, and then you've got basically a partnership, taxes a partnership, and then you go to an S corporation or a C corporation. So there's quite a vast of entity structure that you can choose from. And each of those have different taxability structures. So as you go up the ladder, the nice thing about it is if you start as an LLC and you later determine you want to be an S corporation, you can actually make an election, check the box, and be taxed as an S corporation. And that's a non-taxable event as you go up the ladder. If you choose to be a C corporation and you now want to be an LLC, unfortunately, as you go down the ladder, there's tax consequences or attributes all the way down. So that's what I like about the flexibility of an LLC.
Excellent. Peter?
I totally agree. I mean, one of the great things about the LLC structure, and I can't remember when the state legislature passed or enacted the Limited Liability Company Act, but it has changed in the time of my practice, where the most common business structure that I was doing were small corporations, to now almost everything's an LLC. In fact, it's rare that I have someone who comes in and we create a corporation. And one of the reasons is I turn to an expert like Marc to help on the tax implication side of things. But the thing I like about the LLC structure is that it's also very flexible on who can take what out of the business. For instance, if you have partners, I'll use the word loosely, if you have business members who might want to divide up the pie differently and not equally, the LLC structure lets you do that very easily. Whereas in the old days, working with a corporate structure, it was a little bit harder. So the LLC structure by far is the most common one we deal with.
And from my experience, that's been the case. And I like the ladder approach that you just referenced, Marc, because I had a company that was set up as a sub-S and trying to bring it down to an LLC, and it did create a tax situation, which is challenging. So,
it is.
So from your perspective, again, the most popular choice is the LLC. If it's just one person or one individual that's going to be involved in the business, does an LLC make sense, or would you recommend another option? Peter?
Want me to start off with this one?
Yeah, you start off with that one.
Okay. When someone comes to see me, one of the things I try to figure out is it worthwhile for them to even spend money on a lawyer to create a structure? And as a plug for lawyers, because I know everybody loves lawyers, sometimes the structure is very, very important and very, very valuable, even if it's just one person. So someone might ask, well, in what instance would that be? Well, let me put aside the tax consequences, because I'd like to turn to Marc for that. But on the limited liability piece of it, some businesses, you want to protect yourself. If you have a business that might be engaged in what might be considered a hazardous activity, blasting, digging, heavy construction, wood, I've represented a couple different timber operations. People get hurt. Those are businesses that can offer great risk to the people that work in them, including the single owner. And sometimes what you want to do is you want to create that limited liability around you, and that's what's wonderful about the LLC structure. your exposure really is limited to your investment into the business. Simple example, someone doing business as, I open up my own.
The DBA.
Right. Let's pretend I clear wood. I have a skidder and I want to clear and sell cordwood. If I have an employee who gets hurt, technically that person might be able to pursue me, put aside workers' comp laws for a minute. Maybe they could pursue me personally. LLC structure offers some protection from that, so that my house, my car, my other objects might be protected, and the LLC structure might be the entity that would be responsible. So I do like that. Single person, I might talk to them about what their business is and might recommend that structure for that very reason.
Okay, that's excellent advice. And from a tax perspective, Mark, the LLC, any pros and cons in terms of or implications to the individual? Is it all passed through their own individual tax return?
Yeah.
You're not paying taxes twice?
Yes, and it's a good point that you make, as LLCs are usually generally looked at as being what's called a pass-through entity.
Yep.
And where the entity itself does not pay the tax, the income and expenses are actually passed through to the individual, reported on the individual returns, and paid at the individual level. But as I was saying before, the nice thing about the flexibility of an LLC is if you later choose that you want to be an S corporation, you're still not, by the state rules, you're still an LLC, but you can actually be taxed as an S corporation, or you can be taxed as a C corporation. So that's what I really like about an LLC, is the flexibility that we have in the future. What I like about LLCs as well is that what we really need to figure out, even as an individual, what his or her obligations or opportunities are. And there's debt obligations that exist, and there's protection mechanisms that we put in for the debt obligations sometimes as well. So there's a lot of things. You look at the business, you got to look at, hopefully they go into business to make a profit, but every once in a while they actually do lose money. And so you want to think about the chances of them losing money, and if they do lose money, how is that going to be taxed, or how is that going to be a tax savings to them because they're making an investment. So there's you really can't say for one person as to what it's going to be, because we really need to look at the business. Are they ever going to bring on partners or investors and things like that? So there's a lot of questions that we'll certainly ask.
Yeah, and again, this discussion just reiterates the point that Mike Tolley made during last month's program, and that is the importance of having a good accountant and a good attorney at your side when you begin to assess whether or not you want to get into business. So again, thank you for being here.
Can I follow up on?
Yes, you can.
Thanks.
Please.
One of the things that always interests me, and I'm frankly puzzled and why I would turn to Mark for something like that, is figuring out the investment piece. You know, earlier you talked about regulated versus unregulated businesses, and
give an example of that for our
sure.
audience.
And I think that for me, for instance, I stay away from securities, any business that would have a securities issue. At the level of sophistication, which there are experts in Maine that do that,
Yep.
I don't. Most of the people I represent are the smaller businesses that wouldn't have that outside investment over the magic number in Maine for exclusion from securities purposes is it 35?
I'm not even sure what the magic number is, but yeah, it's somewhere around there.
And again, I need to put in a little plug on the securities law issue. Next month, Chris Howard from Pierce Atwood, who runs the business practice program, will be our guest when we talk about raising money or investments involved in a business and securing financing and that type of thing. So Chris will be one of our guests, and he's done a lot of private placements and investment structures as well. So
at a very high level, you know, I've seen some stuff, Chris. And so the nice thing about the LLC structure, if I understand it correctly from a tax point of view too, is that you could have a situation where I might have come in the business and not have much money, but worked very hard to build it up to a certain point. And then, Bob, you might have joined, and you're coming in more as the finance piece of it. And yet we might be able to figure out through the LLC structure to share equally in the profits. Isn't that right?
Correct. Certainly, and if you want to be taxed as a partnership in the LLC structure, and that's the nice thing. What I like to think about as a LLC, generally their taxes, if it's a dual member, more than one member, is taxed as a partnership. A single member LLC is taxed as a sole proprietorship, both being pass-throughs. But if you're a partnership, the way to think about it is that you and I become partners. I may bring the finances, you may be more educated than me and bring the basically the
intellectual capital.
Intellectual capital, yeah. And so we may split things 50-50. And later on, if things don't work, and since then you've contributed other capital, the nice thing about an LLC is that at the end of the day, you can kind of take your stuff and walk away.
Right.
And I can take my stuff and walk away. It's really kind of a joint venture from a partnership perspective. Whereas a corporation, if you're an S corporation or a C corporation, really we're contributing assets to a corporation. And if we want that stuff back, it's kind of like we have to buy it back from the corporation. It's a separate entity structure.
Right.
And that's the point.
And that's an important point from a legal perspective. It's funny, the corporation is actually a separate entity under the law. And so when a client comes in the room and starts speaking to me about creating a corporation, if it's just one person, you have this sort of strange metaphysical conversation and say, well, there's actually two entities in the room. There's you personally, and there's theoretically this thing you're going to create that can be sued, that can sue people, that can sign contracts, that can enter into negotiations, and is respected under the law as a separate and distinct person.
And the LLC is not?
Oh, I'm sorry. And the LLC is.
It's also considered a separate person or a separate entity.
Right. I slipped into talking about corporations, right?
Okay.
Yeah, you're right.
Let's move into corporations, because I kind of like to go up the ladder metaphor that you've used, Mark. The first rung on the ladder would be an individual who wants to open up a business and not form any real company or an LLC. He's just doing business. He's out.
Right, sole proprietorship, basically.
Sole proprietorship, that's correct. And again, the risks there are, as you point out, Peter, the opportunity to be sued personally.
Right.
Anything else that we ought to, as we go up the ladder, anything else you want to comment on about sole proprietorships?
I mean, just as basically you're opening yourself up for legal liability, and you're being taxed on all your profits and losses at the individual level, and it'll be reported on a Schedule C on your tax return. So.
That's correct. So for all you self-employed individuals out there who are concerned about taxes and the growth of your company, give your lawyer a call, or feel free to call one of these individuals here tonight.
I do have an interesting information that I was just attending a conference, actually.
Go right ahead.
And it's about IRS audits. And the sole proprietorships, if you had the same revenue for a sole proprietorship that maybe has $800,000 in revenue,
yep,
and you had an LLC or an S corp, an entity structure that files a separate tax return, it's 3 times more likely that you'll be audited in an LLC, in a sole proprietorship structure.
Really?
Yes.
Interesting.
Yeah.
So again, I think that's important information to provide to the public. If you have a sole proprietorship that has been reporting X $100,000 a year, and you also have an LLC,
LLC,
or
S
a
corp,
corporation,
yeah,
that has been reporting
the same $800,000. So let's say we had a sole proprietorship that was
Yep.
reporting $800,000, and we had an S corporation that was reporting $800,000.
Mhm.
The IRS basically has this idea that if you're a corporation, so if you've got more structure in place,
Correct.
versus sole proprietors are a little bit more loose. And there, for that reason, there's a 3 times chance.
So
audit
that's
chance.
a red.
It is a red flag.
Red flag.
Yeah.
Huge red flag. Yeah. So the next rung on the ladder would be the LLC.
Correct.
And we've talked at length about the LLC. The third rung would be a sub S.
Sub S, S corporation.
All right. Let's talk a little bit about that, because I've been involved in a number of sub S corporations. mostly prior to the LLC becoming an entity that you could actually form here in Maine. But what's your experience been with Sub-S, and why that might make sense for some businesses from a tax and legal perspective?
From a legal perspective, I guess the only reason that I can think of is that the corporate law has such a long history of established case about disputes, assets, liabilities, everything, that because of that historical basis of corporations existing as a separate structure, which I think dates back to England trying to create business opportunities for dangerous business as the Industrial Revolution moved on.
Mm-hmm.
And so what they wanted to do is create investment opportunities where people would be limited in their exposure to their liability. So that corporate structure is something that historically has been around. That's the only reason I can think of right now, is that the LLC structure is, quote, new.
Mm-hmm.
I wish I could remember the year that the LLC statute first was enacted in Maine. I know this summer, in July, the revised LLC Act was passed.
And what did that do, Peter?
I'm not really sure.
I-
No, no, it modified how you do things. It changed the names of certain parts of the LLC world. There's a bunch of people that helped write that act that could express it a lot better than I.
But for the bottom line is not much has changed
In my
as a
mind.
result of that. From what my understanding is.
Mine too, from a practical.
And again, moving along, looking at trying to assess these different legal formations and the tax implications, we've got partnerships,
Yes.
limited partnerships, general partnerships. Where do you see those working, and where would they be appropriate?
Sure. From a legal perspective, I very rarely deal with limited liability partnerships, LLPs. I hardly ever.
Mm-hmm.
Regular old partnership is an older structure, older than corporate structures.
Mm-hmm.
And so even now you'll have people come in saying, I have a partnership with somebody. And I usually give a little bit of a lecture about how maybe they ought to think about creating it as an LLC and moving it. And I know we keep defaulting back there.
Okay.
But part of the reason we do is because it's such a flexible structure.
Yeah. And let's focus on the LLC. We've got a few more minutes in the program. Time is kind of going by fast here, and let's talk. What are the various aspects of forming the LLC? We've got certificates of formation,
Sure.
the agreement, all of those aspects that people are going to need to be prepared to think about.
Let me give the Reader's Digest.
Reader's Digest.
First, someone comes in and I tell them, get on the Secretary of State of Maine website. As a plug, we have a great Secretary of State website.
We do.
And it's been great for a number of years.
Yep.
And there's a good number of information, a good variety of information you can get there. You can go search on the Secretary of State website for a name.
Mm-hmm.
So go find a name that no one's taken. If you want to be really careful, go look at the USPTO website.
Mm-hmm.
I think it's uspto.org.
Yep.
Find a name you like. Then get back on the Maine Secretary of State website. And if you're going to create an LLC and you're not going to use a lawyer, it's dangerous.
Good luck.
File articles of, certificate of formation
Right.
is the new name of the
Mm-hmm.
of what you file to get it going. It's kind of like the spark that creates your entity.
Mm-hmm.
Simple form, very easy to fill out. You file that, you file it with a filing fee, and boom, your entity's created.
Correct.
Now, that's only the start. If you want to have this protection that we've been talking about, you should go the extra couple steps. You should create an LLC agreement. It used to be called an operating agreement. Have this agreement created. And that talks about the relationships between the people who are owners or members of this group.
Mm-hmm.
Put that together, have another document, sometimes called the unanimous consent of the members, that authorizes you to file the LLC, adopt the agreement, and there's your entity.
Yep.
Each year, all you have to do from a legal point of view is file an annual report with the Maine Secretary of State. But then you need to turn to Marc, because there's lots of other things that are probably extremely important at that point.
We have a couple of more minutes left, Mark. From a tax perspective, what are the other things that people need to be concerned with?
Well, if they're going to have employees, they got to think about their payroll tax situation as well. So they're going to have to file with the state, get an employer identification number as well. The payroll taxes can be confusing, especially for the small business owner. I certainly recommend a plug for, not for accountants, but a payroll service for sure. Mm-hmm. It's going to cause, it's a lot of headache with the payroll taxes and stuff. And do not get behind in payroll taxes. The IRS does not take that lightly.
Neither does main revenue.
No, nor does main revenue as well.
And no personal protection. You
Correct.
have personal liability for that, even if you've created the LLC.
That's correct. That's correct. And the entity that saves the most in taxes?
Well, obviously we look at the objectives and stuff, but you did mention a little bit of the S corporation.
Correct.
It's a little bit of an old entity and stuff. I like the flexibility of an LLC, but there are circumstances that an S corporation will save you self-employment taxes. Mm-hmm. And I don't know if we have time to really go through the basics of that. You have to pay what the IRS as a reasonable compensation to the owner for the services that are performed, but anything over and above that can actually be taken in dividends or distributions of profits, which are not subject to self-employment tax. And self-employment tax, as you may know, is a really expensive tax. It's 7.65% for the individual, and the corporation has to match that. Mm-hmm. So it's 15.3%, yep. And so it's a major tax.
And just to end the program, and you gentlemen are working with many businesses here in Maine and elsewhere. How do you find the economy right now, from your perspective? I know it's challenging times for a lot of people. We only have just a few seconds left. Thumbs up, thumbs down?
Thumbs down. It's difficult out there right now. Yes.
I agree.
All right. Thank you. It's been fun. Appreciate you being on the show.
No problem.
Thank you.